What's going on? Money Morning Live. Hope everyone's doing well. Sorry to cut you so quick right there from Brian, but it's time that we bring in Alternative Wealth Daily with Nick Black. We're going to talk about crypto. What the heck is going on right now? Nick is going to walk us through it in 5, 4, 3, 2.
Pew. Pew, pew. Pew. That last one went right through your brain box, Eric.
I felt it. I felt it. What's going on, Nick?
Well, I'll tell you what's going on. I have a pin with hair. So do you have a pin? Do you have a pin with hair, Eric?
No. Did you get this at a convention or of some sort? Are you the guy that goes and takes treats and pens?
I just have a pin with hair.
That's cool.
Isn't that enough?
It is very nice. I like it.
Doesn't that make me special? Do you out there have pins with hair? All right. Well, for those of you that don't have pins with hair, thank God you tune into Alternative Wealth Daily Live, because we'll do all the rest for you. Then you can go out on your own and get a pin with hair. All right. We have a full show today, including some obvious headlines in the crypto space. We'll talk about the markets. We'll talk about some other things. We will make sure you don't do dumb stuff. There are so many opportunities. If you don't take leverage, if you're not borrowing in crypto, if you're not Do Kwon or Michael Saylor, bro, you good. All of these sell-offs are amazing. It's only, I've noticed the people that are uncomfortable are the people that borrowed, the people that have leverage. Don't take leverage in crypto. Don't take leverage in anything. When they extend you, listen, when you get an equity account and they're like, hey, margin account, 4X and all, you're like, yeah, it's very tempting to get that free money, to get that juice. They really want you to behave poorly. Do not behave poorly. Don't buy into it. Don't use leverage in risky markets. And guess what, Eric? Guess which markets are risky?
What markets are risky?
No, it's for you to guess.
It's
for you to guess.
What markets are risky? Solana.
No, man, that's not a market. That's an asset. Which markets, like bond market, equity market, stock market, which markets are risky?
All of them.
Yes. Did I tee that up correctly?
I know, that was just me knowing.
I feel like we have the highest IQ chat. We have the highest IQ. I would say probably our chat. If we took our chat and Tom's chat, we'll challenge any other chat to an IQ competition of chat IQ competition. Our chat, me and Tom's chat versus any other chat. We will own you.
I heard that you and Tom were hanging out in New York in my neck of the woods. I also heard you had dinner at a hotel, and I also heard you guys didn't call me. I live in New York, man.
Do you really live in New York?
You knew this.
I told you we were coming.
You knew this, Nick.
I know, but I told you like 45 times we're going to be there. We're going to be there. I told you on the way into the plane.
Never told me this. It was probably Brandon you were telling. You
mean Brerick?
Him too.
I told y'all.
Yeah, right.
It was fun. We had a lot of fun. It was Tom and myself and some really good writers and Bob and Mike and all sorts of people that are very talented and clever. But yeah, Tom and I just regressed into eating. I ate the steak thing, le steak frites. He had the chicken, I think. And then we both had the ridiculous, there was churros. You guys know what a churro is? We had a freaking churro, man. We had a churro with ice cream on top of the churro. Ooh.
Yeah, churros are not just, listen, I went to Disney recently, and when I was a kid, you get a churro. It's the cinnamon stick, and it was the best.
Yes.
But now they give you, like, these dipping things. Like that was never a thing before.
These churros had goo in the middle. They had, like, yeah, it was, I don't know if it was like a chocolatey goo or a vanilla-y goo, but then that plus the ice cream plus this kind of sauce, holy smokes. But I'll tell you the one thing that is actually cool is that Tom and I got to figure out, like, I didn't really know where kind of Tom's, investment mind was. I watched his show. I like his show. We just have different, I thought we had completely different investment philosophies. Turns out We are very, very much the same. However, what his kind of value proposition is things you can do right now this second. And as you guys probably understand, my value proposition is how do you set yourself up 3 to 5 years from now? So the answer is one better than the other? No, you need all of this information to make competent decisions. Then you have to decide what kind of investor or trader you are. I'm a longer term, I'm less risk averse, but he has some really cool tech that aggregates tons and tons of data that would take you as a human too long to get. And he aggregates that and presents kind of this host of decisions you could make if you want to participate in like these little day-to-day kind of vacillations, which you can make money. To me, I just like waiting. I like buying stuff and waiting for years. That's just the way, that's kind of more my mentality. Now, we both do very similar, like our personal balance sheets, you would be surprised how similar they are. So Tom and I are very similar in a lot of ways, and we got along great. We had a lot of fun, and I understand Tom much better than I did. And now I realize I need to pay more attention to what Tom is doing. So that is something I learned. And he has an amazing capacity to eat desserts. I learned those two things.
That's a beautiful story. And it takes us, Nick, to our crypto headlines, of course.
What? Let's do it.
Let's do it. We have this one to start. It's about Luna. And Luna meltdown sparks theories and told you so's from the crypto community. Some of you saw it coming. Some of you still can't believe it's real. Was the most significant collapse in crypto history an attack? Nick, what is going on?
Okay, I'm going to go through this with you. There's a lot of controversy over how this happened. However, keep this in the back of your mind. We've been saying for a long time that this whole idea of algorithmic stablecoins was incredibly weak and incredibly risky. Well, the Luna meltdown sparked a bunch of theories, and I know, told you so's from crypto community. This is not a told you so because we didn't say Luna was bad. We said Luna is among a host of assets that are bad. Algorithmic stablecoins and under collateralized stablecoins, they just don't work. Now, turns out whole currencies don't work. Actual fiat currencies crash or die in 35-year lifespan. The dollar's got an extended like fuel set, but for a variety of reasons. However, just in general, I want you to think currencies only last about 35 years. Cryptocurrencies is a tiny, tiny, tiny little volatile space. So you can imagine that timeline is tiny. And to me, a stable coin would, like if I have a $1 stable coin, it means that it represents $1 of buying power. That's the whole idea. It is stable to whatever fiat currency it represents. A euro stable coin would represent €1 worth of value, and they would be pegged, meaning the value is the same. I can buy the same stuff with a €1 stable coin as I can buy with €1. And there might be a lot of reasons to hold stable coins if they were properly pegged. And then you would think, okay, so how do you peg it? Well, the common sense would be like collateral, right? I would have collateral. If I have $100 stable coin, I would like to have $100 in an account, or equivalence, meaning quality, prime, pristine collateral with no credit risk, meaning bills, notes, bonds, tips, receipts. That's it. So government issued assets with no credit risk, right? That'd be the only other thing, not random paper, unsecured debt, corporate debt, high yield, unspecified paper, wallpaper, whatever. No. And so those would be like quasi collateralized. Pure collateralized to me is a stable coin. And then you say, well, where's the money to be made in doing that? Like, why would you do that? Why wouldn't a government just do that? The answer is governments will do it. And when governments release their fiat-backed one-to-one zero credit risk stable assets, there's no reason for any of these things. Now, let's take it one step further into whimsy world. Luna, UST, the group, LFG. And it's important to understand this little triangle exists. You buy Luna, which is a funny money coin they created out of thin air. Terraforma Labs. By the way, real quick, just so you know, the guy that created Luna, he already created Basis Cash a few years ago, and it blew up and went to zero. He's already done this, although that time he used a pseudonym. So it's cool because he just changed his name and it's fine. But he already did this. It already didn't work. It went to effing zero. So keep that in the back of your mind. Second try. Luna is the coin. You buy the coin, you burn that to mint UST. You say, okay, why would I do that? Well, they created another part of this. Actually, it's no longer, it's a square now. There's 4 corners. Now you have Luna, UST, which alone doesn't do you any good because it's just a rando stable coin. But what if you could make a yield? So they created Anchor. Anchor is a place where you make yield. How much yield, you ask? Well, 20% was what they were giving. You say, that's awesome. So I buy Luna, burn Luna, mint UST, which is a weird stable coin with no dollars behind it, but it's a dollar. Got it. Okay. Then I take those USTs and I put them in Anchor and I get 20%. You're like, 20%? Yeah. Wait a minute. Eric, if I say I'm going to give you 20% return on your money, as much as you want, what would one of your next questions be?
I would be happy with getting 20% return on my money.
Right, but you wouldn't have any questions.
I'd say, how? How am I going to get 20% return on my money?
Yes, it turns out you're not the only one that asked how. Everyone asked how, and their answer was, step 1, put UST in Anchor. Step 2 and step 3, 20%. You say, wait, I feel like something's missing. Go over that again. Step 1, take UST, put in Anchor. Step 2 and step 3, 20% profit. And more people started asking, what is that exactly? Step 2 is a little vague. It's a little opaque. And step 2 was a loss leader. They were basically paying it out of their own pocket, out of money that they generated out of thin air from Luna. Now, forget this whole Anchor thing because, my contention was always that once they quit paying the funny money 20% that they're manufacturing out of thin air, people are going to exit because why would you stay in it? Because you start to realize, well, it's not paying me anymore. I'm going to go somewhere else where my money can make more money. Fair. Underpants gnomes. Demayan nails it. Okay, so if my contention was if there's an unwind in the interest rate that they pay, people will leave, the whole thing will collapse under its own weight. I was almost right, but I was giving the world too much credit. I thought it was going to be behavior of investors exiting. Well, we didn't even get to that point. It turns out there may have been some shenaniganery on the part, some Soros-like behavior on the part of BlackRock and maybe Citadel. It seems that they looked at this really obvious Ponzi-nomics scheme and they said, okay, what collateralizes? Well, okay, let me add another thing. It turns out that Do Kwon and company realized pretty quickly that this was not going to work. They've known for a long time this was not going to work. And this is where Do Kwon may be in quite a little bit of trouble. I would be very surprised if this guy doesn't get indicted again. He's already been indicted on something having to do with something else. So this would be indictment number 2. He says that South Korean nationals are not, they don't have to answer U.S. Summons and subpoenas. Turns out courts disagree. He does. Well, when the team at Terraforma Labs realized this was untenable, they created the LFG. LFG, bro, let's go. The Luna Foundation Guard. What was that? A place where you park extra money that would then defend the peg. Well, you shouldn't have to defend the peg if your algorithmic system is so succinct and accurate and clear and concise and it works. You know, mathematical integrity. We don't really have that in the Luna UST funny money anchor system. Turns out in that triangle, there is no mathematic certainty. Matter of fact, the certainty is it will collapse under its own weight because there's nothing behind it. So if there's an exit to UST and an exit to go back from UST to Luna, and these two, the Luna and the UST market caps, are not exactly the same, you could get to a point where they can no longer, there's no more Luna to generate, to sell, to back the price of Terra. So it unwinds, which we saw that last few days. So this guard, this guard, the Luna Foundation guard, had taken on a bunch of Bitcoin, about 1.5 billion in Bitcoin and a few other things, but mostly just Bitcoin. I think there was another sketchy asset in there too, but it was mostly Bitcoin. Well, when the price of UST broke its peg and all bloody panic set loose, which of course it didn't take a mind reader to know this, you just had to look at the math and go, oh, that's clearly flawed. Well, when the clearly flawed thing finally showed its true colors, the peg broke, people started going, oh, and this is the other thing. A lot of people were locked into Anchor and just got to watch their value decrease. So it broke the other day for 2 cents. People were like, uh-oh, $1 is supposed to be $1, not 98 cents. Then it went all the way down into the 60s. And you're like, oh, $1 is definitely not supposed to be 62 cents. That is not right. Then all chaos. People were doing everything they could to exit their UST, to get out of it. Luna collapsed, the price of Luna. Why? Because now everybody's hitting the exit. Everybody's hitting the ask. And when there's a race to the exit, remember, there's only 2 stages of a stablecoin: expansion and death spiral, contraction. And so when all this occurred, the guard, they tried to use as much capital as they could, and it got nuked very quickly. They liquidated all that Bitcoin. Well, this didn't help the Bitcoin market, having to absorb another $750 million of Bitcoin sales, including whatever, because the guard, not only did it send $750 million to protect the peg, it also took another $750 million worth of Bitcoin and other assets and poured it out to all these market makers so that they could protect. And these were all these weird loans and all this crap. No one's even really talked about that. So this whole catastrophe just lit on fire. They just lit money on fire. So some people saw it coming because math, right? And it is now they're calling it an attack. See, Do Kwon will call it an attack because clearly this would not have happened naturally, even though we all know it absolutely would have happened naturally because prices don't always just go up. But I'm going to read a little bit from this article because there's some kind of funny parts to it. But the contention is that BlackRock, and we know that they're kind of dubious individuals, that they looked at this system like we have, and we're just simple mathematicians here. They looked at this and they went, well, that's clearly flawed, Ponzi-nomic, dumpster fire, garbage juice. Well, let's just destroy it. So, and this is word on the street. This has not been proven. And also, nothing I'm about to talk about is illegal. This is not illegal. You might say it's amoral. It's George Soros-esque, but it's not illegal. So it looks like BlackRock borrowed UST for a sweetheart deal, right? The stable coin. They got a bunch of UST, may have gotten some Luna, but they definitely got a bunch of UST. They borrowed it at a certain price, started dumping it. They also started dumping Bitcoin. So these two things made the price of the token drop. When it unpegged, how would the LFG defend the peg? By selling Bitcoin, by selling the only thing they had on their books that has any real value. So they start selling Bitcoin, they start selling UST. Basically, it's a big giant short position they put on. And by selling the asset that LFG was going to use as collateral to protect the peg, there was nowhere for them to run. They had no collateral. Their collateral was shrinking. Luna, the price was shrinking as people hit the exit. So anywhere they looked, there was no collateral left. Had they had collateral in dollars, they would have just dollar for dollar swapped. Oh, here's a dollar. Here's a dollar. We need a dollar. Here's a dollar. They didn't do that because Do Kwon, just like Michael Saylor and all these other people that think they have a crystal ball, they were calling the bottom of Bitcoin at 40,000 because they had recency bias, because they saw Bitcoin at 68,000, 69,000 in November, and they thought, well, it'll go back up any day now. It'll just go straight up. No, dummies. It won't just go. It won't just do nothing. It's price discovery, and it's buyers and sellers with a variety of intermingling decisions to make and crosswinds and needs and wants. And there's no Michael Saylor and Do Kwon don't have it figured out, as it turns out. And so this just created a death spiral, and this thing got nuked. Anybody buying Luna or buying UST now is a compulsive idiot gambler. You're just an idiot gambler. I knew some guys that were like, when Luna was $80 like 2 weeks ago. 80. It's like around $2 right now, I think. People are like, yeah, it's such a good deal. What? You're gonna go buy into Bernie Madoff's fund now that it's bankrupt? You want to go buy into it because it's at the bottom? No, bro. When you see a Ponzi scheme, you're gonna go buy BitConnect? It's the same thing. Only Do Kwon's intention was never to steal. So this is the thing. Do Kwon, he was a victim of his own, of a belief in him that he's some kind of prophet, right? He believed he's some kind of tech guru, genius prophet. If you discount the fact that he already exploded, demolished Basis Cash just a few years ago. If you forget that part. So this guy's got bad skin in the game. He's a victim of thinking he's too intelligent for the rest of us. He's a bit arrogant. Like Michael Saylor, these guys that believe they know something that none of us know. And then you think, well, wouldn't you have all the money in the whole world? If you knew something that none of us know, don't you? Do you think that you would have all the money in the whole world? If you knew what no, none of us know. We can only we make inferential decisions, and we just have to. So anyway, you guys know this. I'm not telling you anything you don't know, but keep that so it looks like BlackRock took advantage of a poorly built system with arrogant fools at the helm. And they knew that these arrogant fools would behave the way all arrogant fools behave, as if they know something the rest of us don't. And the only thing that they may have known that the rest of us don't is how fast this would collapse. Stay away from Luna, stay away from UST, and stay away from anyone that can't explain to you clearly how they generate 20%. If they call it staking, but it's not, you weren't staking anything in Anchor. You're just giving them your currency units, and they were giving you funny money. You're like, sweet, more funny money. But people that asked how that money was generated never got a good answer. So yeah, man. Yeah. Okay. No matter how hard your day is going, let me just get through just a couple of quick little, there's some pretty funny tweets.
Okay, sure.
You know what? You know what? Forget that. I think we've covered the story. You guys get it. So the talk on the street is that BlackRock and Citadel, they did this. There's nothing they did that was wrong. They took advantage of a flawed system with arrogant individuals. Guess who else has got some questions to answer? Our friend Michael Saylor. But we're going to save that for tomorrow. He's got a little bit of explaining to do to his board.
So tune in tomorrow. That's what this means.
Tune in tomorrow. Same bad time, same bad place. All right.
Ready for our next headline, Nick?
Let's do it, man.
Because why not? When we have one, we'll have two. Coinbase shares plunge as weak earnings prompt near-term caution. Wall Street analysis lowered share price Nick's dying over here as I'm reading. Share price targets for the crypto exchange after its first quarter earnings report. I'm assuming, Nick, the earnings report didn't look good for them?
Well, yeah, it did not look so good. Wall Street analysts lowered their share price targets. By the way, do you guys know Cathie Woods went in pretty deep? She added 500,000 shares on this. I think, this is not advice, I think this is a good play. I think finally you get Coinbase shares at a price that makes a little bit more sense. You want to, if you're interested in this asset, now is when you do it. When there is total, complete chaos, panic, everybody's like, if the sky is falling, it's over, we're all going to die. That's when you start buying quality assets. And I think Coin is a quality equity. I mean, you got to be careful. that you don't have too much in one basket, which we'll talk about a little bit later. There is some risk to essentially being indexed completely and totally into crypto and having no outside. But if you look at Coinbase, for instance, if you have money in other places, in 401s or things like that, where you have a little extra cash and you're sloshing around, you're like, where should I go? Where's some good discount? I think this is a good discount. You do you. Shares of Coinbase Global tumbled more than 26% on Wednesday to $54 after they reported a pretty fat loss. The stock is down. I think it was down 77% last I checked, but who knows? Wall Street analysts see Coinbase as a leader across the broader crypto industry. They see headwinds. Look, when you look at these exchanges, then you get an idea of what is happening in the market. If the exchanges are processing less transactions and people are less excited, less happy, less interested, less participatory, then there's less fees generated. Less fees, and these guys are going to turn in lower revenues. They have operating costs that are X, and hopefully their marginal revenues are X plus some amount. And if that plus some amount is not a plus, if it's like not a plus at all, if it's flat, dead nuts even, or below, they lose money, and that's what it is. So Goldman Sachs downgraded them to neutral from buy. Goldman Sachs, always a kings of the industry. I can't tell you how many people I know that got fired from Goldman Sachs that are actually the people that got fired. I trust more than the people that didn't, because the people that didn't get fired from Goldman Sachs means they fit into that model. And that's a little weird and kind of gooey, because it's just a kind of a crummy group of individuals. For so many reasons. They've tried to topple governments. Half of them should be in prison, but they're not. Anyway, different story, different day. They downgraded Coinbase from a neutral to a buy, reducing price target from 240 to 80. That's a pretty big whack. Goldman analyst Will Nance said Coinbase is still the blue chip way to gain crypto exposure for investors, but doesn't expect the company to return to its recent levels of profitability in the near term without a spike in crypto prices or more volatility. So he's saying, he must have a crystal ball. He's saying, hold on, everybody make sure you're sitting down. Eric, are you strapped in?
Yeah, I don't have a standing desk.
Okay, so listen, I want you everybody prepare for this, because this is the pearl of the day. Goldman Sachs analyst is saying that in order for the price of Coinbase stock to go up, there'd need to be more revenue. It's crazy. These guys really get it. That more revenue would make the stock go up.
It's incredible.
I get chills when I read what Goldman Sachs words. Anything that comes out of that place, well done. Bravo, gentlemen. Bravo. Anyway, Coinbase is getting nuked, and there's some opportunities there. Listen, we all know that the whole space has deteriorated just about in the same way that it increased. You took billions of dollars, trillions. I say billions because most of that was siphoned off to rich people. So let's just say trillions for the sake of argument, was thrust into the economy. It was given disproportionately, some might argue, and people spent it irrationally, some might argue, and a lot of that money made it into the equity space, as you saw, into the crypto space, crypto Reddit, all this kind of stuff. There's a lot of bad behavior. There's a lot of free money floating around that ended up in bad places, and a lot of perverse behavior. We all know this. If you take a bunch of money and shower it to the economy, they're going to behave the way people behave. IQ is not even. It's a sliding scale. Some people bought TVs, some people bought cars, some people sat on the couch and did irrational things. Well, a lot of that money made it into the crypto space. Most of those dummies got nuked. A lot of those dummies then added extra cash to get back to even. Sunk costs, all this. So they started gambling more and more leverage. All I got to do is do a 10X. I lost $100, but if I take this $10 and get 10X leverage, I'm going to get back to even. Then I'm back in the game. Small time setback for a big time comeback. And there was a lot of bad behavior. But over the last 7 months, now it's the other way. People got to go back to work. The free money faucet stopped for now. And you slowly unwind the bad behavior. You slowly unwind the excess. You slowly get the supply chains moving again and all these logistical snafus that make dummies scream inflation. And it's not, but fine. So it makes a good bumper sticker. Because inflation is always and everywhere a monetary phenomenon. And if you don't have monetary inputs, you don't really have inflation. So, but what you do have is prices going up, and the average taxpayer and the average American household feels the pain, and that sucks. Well, most of the gamblers are gone. Most of the bad behavior is gone. And what this is, in my opinion, was a big, clean washout of everybody else, the smart money gamblers. And just because someone's got billions of dollars doesn't make them not a gambler, doesn't make them a good bet. There's a lot of bad behavior in smart money. And these guys are getting washed out. And then you have BlackRock taking advantage of an obviously flawed system, because all of these algorithmic stablecoins are flawed. And I, by the way, don't think that DJED is going to be any better. Well, it's Cardano. Yeah, I get it, but you can't manufacture stability. If you don't have $100 to match your 100 stable dollars, you're just hoping that everything works out. To me, I don't want to hope with my stable coin. I don't want to go to sleep at night with $100 in the bank and wake up with $40 in the bank. And they tell me, oh yeah, we unpegged. What? What do you mean? What do you mean you unpegged? Yeah, we unpegged last night. No big deal though. Have fun with your $40. No. There's like, well, here's 20% funny money. No, I don't want your funny money, man. So anyway, all this results back to you had a lot of people fleeing the market, a lot of people getting nuked, a lot of leverage unwinding, a lot of bad behavior, even at the smart money level was getting nuked. You're starting to see, what does Warren Buffett say? So we don't like everything he says, but some stuff he says is good. You only see who's naked or who's swimming without a swimsuit when the tide goes out, right? We have seen a lot of people that were naked, that were doing bad things, stupid things because of arrogance, because of hubris, because people think they're smarter. You want to be the smartest person in the room? Be content to be thought stupid and a fool. That's a rejiggering of Epictetus in, gosh, this goes back to like the time of Juvenal. But anyway, point is, be content to be thought stupid and foolish, and you will learn. If you think you know it, you will get nuked. You got to always you want to fail fast in investing. Fail as fast as possible. Anyway, I think that Coinbase now, their shares, they look better because if you look the last 6 months of craziness and all the COVID stuff, you were like, I don't know what's going on. There's free money floating around. This feels good, but I feel like I'm on the top of a swing set and I don't know when it's going to give way. Now, I think it makes more sense. Looking forward, you can feel much, much more confident about investing. I know a lot of people are like, no way, man, I'm going to wait till the bottom. We don't know what the bottom is. We don't know if it was yesterday. We don't know if it's tomorrow. We don't know if Bitcoin's going to hit 12,000 or 340,000 next. We do not know.
Just like Juvenal, we don't know the top.
Yes, Jeff in Colorado. Juvenal was bred in circus, but around that time, I think around the same time, it was Epictetus. Look up Epictetus. Content to be thought a fool. If you're gonna, Jeff, because I know you like to look that kind of stuff up, as do I. All right.
There you go.
Yeah.
You ready for some markets?
Yeah, I think Coinbase is. What do you think, Eric? Would you, if you had, $500 sitting somewhere, and you think, it's stuck in this little, partially managed 401, whatever. Yeah. I can't get it out. I take a tax hit, but I could move it. Would you take a flyer on Coinbase right now?
I would take a flyer. I believe in Coinbase. I think it's a great company. I don't think it's going anywhere. Yeah, I think it's a believer. $500, no problem.
I like it a lot.
Yeah, me too. And that's going to bring us, Nick, into our digital asset market review, where you're going to take us through the digital market, and you are going to ask my question, which is, well, Nick, I've been curious. Can you explain selection risk to us, please? What is it and why is it important, please?
Tasty subject. Let me ask the chat real quick. Do you guys understand what selection risk is? Or from the question, can you kind of distill what selection risk might be? If you're doing your Series 7, you're going to nail this one. But for everyone else, you might say selection risk. It's the answer is embedded in the question. So essentially, while you're working it through your brain boxes, selection risk is if I'm looking into a market, it's the opposite of indexation, really. Selection risk is what if I pick an asset and it's the other 7 assets that move forward. It's the tragedy that I might, well-intentioned and right-minded, pick the wrong one, bet on the wrong horse, right? And so you don't want to, and we kind of preach this, I think, is the idea of being in infrastructure, being in the bedrock of this space as it develops, because we are very, very early, but we don't know who the winners are. And the winners are not always determined. They're mostly determined by the best teams. They're mostly determined by the best technology, the best timing, right? Hopefully the best tokenomics, but we don't know. There are no winners yet. You could call Bitcoin a winner. It was a penny. It is not now a penny. People are like, oh my God, 69,000. Now it's 20. It's failing. Is it failing though? It's still the most appreciating asset in the history of humanity. Even with the 47% year on year sell-off, it's the most appreciating asset in human existence since Mary. Was Mary? I guess it depends who you think was the first bipedal human or whatever your origin story is. But if you pick the wrong one, you might miss it. You might be doing the right math, but you might be spreading it too thin, right? So early in a space, it makes sense to have an even distribution among what you would consider the quality assets. And that's where your 5 T's kick in, right? And the top one is the team, because the team is the most important thing. They're the ones that have to get the ball across the finish line, or at least play the game. Without a good team, ain't gonna happen. Doesn't matter how cool the idea is. And so keep that in mind, that when you're buying, don't try to pick a winner, right? Think of yourself as indexing into value plays. Indexation is buying an index that holds a whole big giant basket of assets. Well, you need to create your own index. I think it makes sense. Some Bitcoin exposure, some infrastructure, maybe some AI if you're crazy like me. But as you're looking at these markets, the only reason I like the red here, which look, the whole crypto space is 1.26. It's 1,200 billion. You say, why is he talking crazy? It's 1.2 trillion. It's almost been reduced to 1/3 of what it was last November. You know, with pretty fair certainty that the markets will go back to what they were in November, 7 months ago, because the world's not done with crypto. It's not like they said, well, because Bitcoin's down, I'm out. Because Luna didn't work, I quit. No, man, that's silly. So you're looking at these assets, you're saying, okay, I'm going to look at my portfolio right now and what I think is quality, and I'm going to look at the best discounts. Eric, did you buy anything over the last 5 days?
No, I haven't bought much crypto, and it's sad because now is the time to do all that buying. I tend to like buying at the highs. It seems to be the strategy that works worse
because
for me. But you don't know.
We get excited. Yeah, we get entranced and everything's going up. And what happens is you don't want to miss out. And that is the FOMO, right? The fear of missing out. But that's dialed into humanity, right? True. You're sitting at a cafe and one dude runs by, you look like that crazy guy. But if 100 people run by, you're like,
you make it up.
Go.
Yeah,
we're going. Right?
That's such a good way to explain FOMO, Nick. I've never heard it explained that way, but that's totally true.
Yeah, and so you go, maybe 1 or 2 people are running, and then they kind of they look back, they're like, what are we running from? Oh, it's Chucky. Just go punt him like a football. You don't even need to worry. He's not even gonna just punt him. And
why is everyone so scared of Chucky? I don't get it.
Why are they so scared of Chucky? It's what he'll do at night.
Yeah.
He'll climb around like a little, thing, and he is cute. You want to cuddle him. You do want to cuddle him. Even with the steak knife, you just feel like giving him a big hug. Like that's all he really needs. Well,
what's scarier?
Anyway,
Off topic. Not that we don't ever go off topic.
Okay.
What's scarier?
Oh, I know where you're going with this. Annabelle by a New York mile.
I was not going to say Annabelle. I don't even know who that is. I was going to say a Gremlin or Chucky, because you could punt both of those.
You don't know who Annabelle is?
You know, Nick, if it's a movie, I'm going to look it up right now.
Oh, you got yourself a weekend of horror in your future. And I'm not just talking about looking at Bill Clinton's tweets.
Annabelle, that is creepy. That looks like the, what is that show? The movie.
The Conjuring. The movie's The Conjuring. That's what, she's one of the creaturey, doll, psychopath, murdery, monstery things that just keeps showing up where people die.
Yeah, it's creepy looking. Creepier than Chucky. You win.
Annabelle would own Chucky. Annabelle would chop him into 100 little plastic porcelain bits.
I like what you did there.
Okay.
Take us to the market.
So, back to the market. So, when you're looking at these things, don't say, I'm going to time this, I'm going to time that. You should continue to be dollar cost averaging. And as you're dollar cost averaging into those assets that you think are the most valuable. I'll tell you what I've been buying. Okay. I'm not telling you what to do. I'm just telling you Annabelle is real. No, Trader Joe, Annabelle is not. Well, wait a minute. I don't think Annabelle is real because, science. So far, there are no dolls that have been proven to murder people. So far. We'll see. All right. In the same way that algorithmic stablecoins, the peg is not real. The peg is as real as Annabelle. It's scary cool, but it does not work. All right. So Bitcoin, huge discount. If you don't own some, consider it. Ethereum is the only one I'm not adding because I don't think that the future is going to be built on Ethereum. I think the right now is functioning off of Ethereum.
Oh, Nick, question.
Yes, go on.
This is actually my personal question. So for someone like myself and others, I know that a lot of people were in looks. I am completely out of all my looks now. I did 2 great plays to get out, by the way. Got very lucky. So I have, I don't know, 15, 20 grand in Ethereum. Should I be selling the Ethereum now and buying Bitcoin with it? Or do you think you should hold it? Because it's not a good time for anything.
I don't think you sell anything unless you're deep in the money profit.
Which I'm not.
The reason I say this, you don't know what's going to bounce, what might cause what to bounce, how it's going to bounce, where it's going to go. I think what you do is you look at your portfolio after all this carnage, because now your proportions so let's just take infrastructure just for a second. And let's say you owned only Ethereum, Cardano, and Near, and Algorand, okay? Mm-hmm. So of those, I would say, okay, what's been punished the most just now? I say, okay, I look at the daily and the weekly. I say, okay, in the last week of carnage, Ethereum's down 28%. Cardano's down about 40%. Near is down about 40%. Algorand down 33%. So I'm going to say, okay, I'm going to try to edge into the positions that have gone down the most because I'll get the most buying power and that are the weakest in my portfolio. So let's say I was low on like Near and Algorand were my 2 bottom positions. Then I would go, okay, I'm going to add Near and Algorand, but over the 2, I'm going to add Near first in a higher proportion than Algorand because there's another 5% there. Now, again, this gets really tricky because you don't know the future, and you also don't know if these things have found a bottom. My gut feeling is we are very close to or have kind of touched bottoms. I feel comfortable adding new money at this point, pretty much across the board. But the way I'm adding it is with what I think are quality assets. I would urge people to look at Matic. Look at Matic, look at Near, look at Algorand, look at Cardano. If these are positions you're not strong in, you don't have solid positions, that's where you're adding. Now, if you go, what are the most quality? Cardano for the team, Matic for the partnership. Remember, they're partnering with Meta. They're going to be the underlying payment gateway for assets on Instagram. That will be a big deal at some point. I don't know how long that takes to get to fruition, but it will be. I think Near, people are missing it. I think it was $11 last week, right? You don't think it's gonna come back? It's really hard to get, and it's a Coinbase Ventures project, and Coinbase needs a win. They need a big win. Shiba Inu is a dummy coin. Stay away from it. It's just, we just watch it because we want to see what dummies are doing. All right. And Algorand. They are the sponsors of FIFA, of World Cup in Qatar. They are, and also, by the way, for you guys, don't say Iran like some redneck hillbilly. It's Iran, Iran, and not Iraq. It's not Iraq and Iran. Iran, Iraq. Don't sound like a damn hillbilly going down to the local store, get you some horse rub. No, ain't about all that. Sound educated. And when in doubt, if people ask you financial questions, just blame it on interest rates, drop the mic and walk off. Okay, cool. So those are the assets. Now look, Cosmos. The only reason I say it's not in those top tier is because there's a lot of DeFi going on in Cosmos. My worry is that, right now, a lot of the value proposition in Cosmos is their DeFi, and I think DeFi is about to have a rude awakening. They're going to have a very hard time absorbing new cash. I think governments will absolutely regulate stablecoins, maybe into obsolescence. And so, yeah. So my top excited buys, and I bought Near 2 days ago. I bought it a little higher, but whatever. I feel good. I bought Near. I bought Algorand yesterday. I bought more. What did I buy? Oh, I bought Matic. So and this is the order. I bought Matic about 3 days ago, then Near, then Algorand. I added something else. I don't remember. Oh. I took advantage of NewNet. NewNet being so cheap. So 2 cents? Come on. That was the ICO price. I want to get that. So, but these are far off bets. Also, if you think you missed AGIX and it doesn't scare you, 5 cents is better than the 66 cents it was in November. You have your November cheat sheet. They're not going anywhere. Singularity DAO is doing well. The platform itself, they're going through some big changes. They're doing a bunch of new stuff. They have a bunch of new proposals. I don't know what all will occur, but it's cool stuff. They have a documentary coming out tomorrow that should get some excitement. So if I had one specific token to buy today, it'd probably be Singularity DAO. But if I could buy two, it'd be Singularity DAO and AGIX. And the only reason I say that is because I believe that when they release this documentary, and if we find a bottom here in the next 3-4 days, week, whatever, who knows? Maybe we'll be in Chicago and we'll be able to talk about the bottom that we found. I'll be able to tell you about the bottom I found. I found this bottom, everyone, and I might even draw it on if they have I'll draw the bottom for everyone.
You bottom finder.
See me draw a bottom.
Hey, Nick, you want to get to some questions, or do you still have more you want to check out in the market?
Would, man. I ain't got nothing else to say about this market. It's red. As a buyer, you like that. As a seller, maybe not so much, but value investing, long term, be smart.
Well, let's get into some questions then. We have from Natalia from New York. Hello. I also live in New York, which Nick knew before he traveled here. Didn't invite me to dinner. Nick, can you define stablecoin?
Yes. So a stable coin is a digital asset that intends to be pegged or value equivalent to a fiat asset. Example, $1. You might have a US dollar stable coin. USDT is an example. US dollar tether is a stable coin. It means to, or it intends to maintain the purchasing power of $1. 1 USDT equals $1. Until we found out that they don't actually have dollars. They have only about $2.60 worth of dollars for every 100. They're only 2.6% cash capitalized. Now the rest is what they call cash equivalents, but if you look under the skirt, what you will see will not make you feel so good. That's why I say don't hold stable coins. If you have to hold a stable coin, hold USDC. It is the best. It's the leper with the most fingers. Let's put it that way.
Thanks, Nick. Well, let's get into our next question, which is from Carlton.
Wish you would.
Do you teach how to convert assets?
Ooh, that is kind of an abstract question. Convert them, Carlton? I don't know what you mean. Convert them to what? Convert them to other assets? You can do swaps. You can do a sell and a purchase. There's places where you could collateralize your crypto assets and borrow against them. You have places like Maker and Dai where you can go take real world assets. Those can become collateral to mint Dai against that and go into that whole ecosystem and enact loans and all this. And by the way, the best thing that happened to Maker, that whole platform, that's kind of a stable coin system, is that UST got found to be basically a Ponzi-nomic fraud, and Luna got found to be a fraud. Do Kwon got found to be a fraud twice. And all of that stuff, it put people under the idea that, well, maybe this idea about Maker and Dai, maybe even though they're a little bit slower and maybe they're slower because they're thoughtful. Maybe they're slower to market because they don't want to release a garbage product like Do Kwon and make a lot of people poor by going out there. And this is the other thing. This is where Do Kwon's going to get in trouble. Same thing with Michael Saylor. Is they went out and had these big social media campaigns where if you even question their math, these dudes, not Michael Saylor so much, but Do Kwon, he would literally curse you out. He would tell you you're an effing idiot, and but he wouldn't like be clever with it. He would just call you a bleeping idiot on Twitter. And then he would make fun of you. Ha ha ha, you don't know anything about numbers, dummy. What he should have said was, ha ha ha, I'm Do Kwon. I've already completely evaporated one project. So if anybody knows what a bad project looks like, it's me. His name, he goes by @StableKwon. You know what? You get 5 seconds of digestion, Kwon.
No, Kwon. Ugh. Nick, let's get into our next question about holding AGIX. I know you love AGIX. So Tom asks, would you mind reviewing where is the best place to hold your AGIX, MetaMask versus Singularity DAO, and their benefits, please?
MetaMask, well, listen, when you're on Singularity DAO, it's just accessing these wallets and looking at them. If you take assets onto Singularity DAO and you place them somewhere, but right now AGIX is not one of those assets. They're not offering yield or anything like that. In order to stake AGIX, you would buy it, put it in MetaMask, and then you would stake it directly with Singularity Net, which is the main company. Okay, so that's how that would work. I have some staked. I have about 90% staked and about 10% free float that I, if we got a big run, I would probably trade it. But man, at that price, I'm going to buy some when we get off of this thing. It's less than 6 cents, bro, buddy, guy, dude, fella, come on. All right. So yeah, MetaMask.
Next. Yeah, me too. Next up, we have Avon asking, Nick, do you recommend a Ledger Nano S or a Nano X? And what's the difference?
Nano X? Yeah, the Nano X has all the buttons on it. It's got much more dexterity, and I like it. I don't really recommend either of those two. I recommend the N0, but it is a little bit more costly, but it is way awesome. Way awesome. Awesomer is not a word, but it is so much more awesome. It's got like cool spy stuff. It like measures background radiation to create passwords and stuff. It's super dope. And then you can get graphene, which is this big stainless steel sheet where you can scratch, like use this thing to scratch your private keys. And then you separate these two sheets and you put one in one safe, one in another safe, and they won't even burn up. Like you can light them on fire and they're fine and get your money back. So anyway, I like that. I like N0 and I like graphene and I like what those guys are doing. It's just but it's like a $500 and change device. But then on the other side of it, you imagine what you have in crypto, what you have to lose. If you have anything more than like $1,000 worth of crypto, then putting $500 in security measures in place is probably not a bad idea.
Probably not a bad idea.
But of the Nano S to the Nano X, you use the Nano X because it's got more dexterity and it can hold more assets, even though it's not really holding them. It can cold manage more assets. Let's say it that way.
Thanks, Nick. Well, I did just pull a question from the chat, It's a little in depth. I don't know if you could help with it, but it has to do with LooksRare. And I figured since we talked so much about Looks in the past, even though you and I are out of it, maybe everyone isn't. So this is from a new member. I have a MetaMask wallet that was successfully connected to LooksRare when I staked about 5,000 of tokens. Now, when I try to reconnect, the value fields are not reflected on the Looks website. So have you ever seen any issues with this? Is it a time thing? What are your thoughts?
So, okay, when you go here onto, I've got it on the screen. So when you go to LooksRare, and you go to the point where you would say LooksRare compounder or whatever, wherever your stake was, you click on it and it says connect wallet to view. When you connect the wallet, you have to scroll down a bit because it's going to be down. It's not going to show that you own the tokens. It's going to show that the tokens are collecting interest. Then it will show the interest that you're collecting. So remember, it's got to be the same wallet. You have to be logging in with the same wallet. If you lose access to your wallet and you can't log in, it's got to be the exact same wallet that you park the tokens. You can't, this is a smart contract. You can't park the tokens in one wallet and then through another wallet come and look. Same wallet address. That's pretty important. Which is another reason why you don't want to lose access to your wallets. Let's say you're pushing a bunch of assets through your wallet, one wallet, and then you lose that wallet, you lose access. Guess what? You can't unstake anything because you need that wallet to unstake those assets. Make sense? It should all be coming quite clear now. So you would connect the same wallet if you scroll down. Now, what you would do is then you would, if you wanted to get your currency units back out, which at this point you've gotten nuked, but if you wanted to get them back out, you would click unstake, and then you would enter the number you want to unstake, which would be here in this smart contract, not in your wallet. But you have to connect your wallet to facilitate that because it's got to have a way to link up to the smart contract handshake that you did earlier when you staked the tokens. That's a lot, but there you be.
Thanks, Nick. Well, what I'm doing right now is I am looking at the chat, and I was looking at the chat. I know.
Are you asking for? You're asking for keys tunes?
You wouldn't believe how often I typo. I spend about half of my messages.
How do you get it that wrong? How do you get it that wrong?
I have 5 things going on in front of me. Plus, I have to listen to you. I never know when you're gonna ask me a question. I have to pay attention. Okay, here I got a question. Any thoughts on AXS and Gala? Is it a buy now?
Oh,
isn't that one of the game tokens?
Gala's not a buy. I'm not doing pay to nothing right now. It is having a little bump of a day. It's up.
Gala Games.
It's up 1.57%. Look, man, the games, we're going to talk a little bit about tomorrow, maybe about some GameFi, because I want to explain to everyone why most of the metaverse, Web3, it's not built, it's not determined what's going to succeed. It's kind of a Potemkin village, and we're gonna talk heavy GameFi. Would I be leaning into these assets? Well, they're certainly cheaper than they were a week ago. And no, Dan, I did not buy the Beeple Madonna NFT. Apparently, a lot of people are not so happy about a naked Madonna with like plants and flowers and weird colors growing out of her. I'm not even going to try to explain it because I would get Karen into obsolescence. Just know that it's quite exciting. Ape, no, I wouldn't buy Ape because it's not a DAO. The coin is stupid. It makes no sense. They're just trying to strip mine you guys. The Ape community is a small group of social signaling idiots. They made a lot of money because they were involved in the first big project that got hyped up. A bunch of celebrities jumped into the coin to look cool, to NFT to look cool. They don't know what they own. The proof is in the pudding. Mark Cuban owns one and Eminem owns one. Would you get your financial advice from Mark Cuban or Eminem? No.
Slim
well,
Shady.
the team at Ape, they're no better. They're no better. They're just strip mining you guys. They're strip mining the community. It is an illiquid asset, and if there's a run for the exit, you're going to see how illiquid it is. I would not touch that token. I don't think they're building the future. They're building nothing. I think Their DAO isn't even a real DAO. You have no voting rights. You vote on stuff, but they have the right to supersede all votes, meaning you don't have any votes. So the whole thing is a sham. And my guess is at some point, those dudes are going to get called to answer some very uncomfortable questions about an illegal securities offering, which is what I think ApeCoin is. I think it's absolutely an illegal securities offering. Anyway.
And yeah, that brings us to the end of the show, Nick.
Thank you. That's all I have to say about that. That's all I have to say. We're gonna get more into GameFi and Michael Saylor tomorrow. We couldn't put it all in one show, but tomorrow's gonna be fun. Don't stress out about these markets, bro. Just relax. Buy quality. Buy stuff that you like. Look, you'd already be up about 18% if you bought NEAR when we started talking about NEAR 30 minutes ago. Have fun. Stay out of trouble. You guys rock. When Tom, watch Tom's stuff. Tom knows his stuff. Okay. Pay attention. You need both sides of the crypto equation to get the full picture. Stay out of trouble. Stay in school. Don't do anything my poor insolvent drunk, strung out on meth grandmother or Brerick wouldn't do, since he wouldn't join us for dinner. I guess he'll just have to join us tomorrow. Same bad time, same bad channel. Pew pew. Pew pew.